And I just allocated to basically the strategy was go long the internet and short anything that gets disrupted by the internet. Great strategy. And it just continues to work to this day. Like that, anyone who gets a credit card gets an interest rate of 20 to 25%. Whether you are a recent college graduate or you're Bill Gates, if you apply for a credit card, your interest rate is 20 to 25%. And what I realized is that, the blockchain was the next protocol. We're done the communications protocols. We're now doing the money protocols, right? 40% of all public company audits, or 40% of the ones that they reviewed, have a type 1.A deficiency, which is the most serious type of deficiency. You do a procedure and you compare it to what the rules and regulations are, and if there's an issue, you raise it. Like that's a model that works in every vertical.
Welcome to another episode of A Growth Ventures podcast. Today we're hosting Jason Jones, co-founder and CEO of Tellen. Jason is an entrepreneur with a proven track record of building businesses across fintech, AI, and blockchain. In this episode, we'll discuss his journey from investor to entrepreneur, his approach to launching and scaling ventures, and how Tellen is helping accounting firms with AI solutions. Jason, welcome to the show. It's great to have you here.
Hey, Hamlet. Thanks for having me.
Of course. So Jason, I'm looking through your, CV slash profile on LinkedIn. Just to give some people some context, you went to Babson in 91 to 95 as an undergrad. If I remember correctly, Babson is like at that time was, if not the top or one of the top entrepreneur programs in the country. Is that correct? Or is my memory?
It was number one in entrepreneurship, and it's still number one in entrepreneurship today, according to U.S. News and World Reports. I went there because it is focused on entrepreneurship, and they've done a great job just continuing to double down, triple down on entrepreneurship in their educational program.
And you were the class president, so does this mean you were the top entrepreneur in the top entrepreneurship program? Or what does that mean exactly?
That meant I was pretty good at getting beer for people.
So what are some of the things during your university days that you kind of learned that have kind of resonated throughout your career that you kind of can recollect and share with the community?
Just in general, or just not Babson, but just in general.
Yeah, exactly.
I was, some people go to college to discover themselves, and I was born to be an entrepreneur. I knew it from, when I was 12 years old, and have always enjoyed starting businesses, starting projects with friends, and kind of being creative and kind of creating a new business, and then making some money and having fun building along the way. So to me, the career has always been about starting new ventures, and my career just happened to I was had a newspaper out and I actually had a moving business and a painting business when I was a kid, and then when I went to Babson, I ended up coming out and I wanted to do something around business fundamentals to begin with, just so I could kind of get my footing as a young professional. So I did go into the investor business for a while, but it was always with the intent to get back to starting businesses, and that's what I've done. And I've kind of pursued this long career of starting businesses, back of the napkin type of thing, kind of going through that process, which we can dive into here on this podcast.
Amazing. So like 95, you graduated at Babson in 95. I graduated from SC at 2000. Just for some of the younger audience here, we weren't doing pitch decks back then. We were doing, the entrepreneur community wasn't as developed as it is today. We were writing business plans and scrambling to find funding and things of that sort. At least I did while I went through school. Was it similar for you as well too, or is that about?
Yeah, I remember. I remember writing, 100-page business plans for new ideas. Definitely, a lot of detail, and I would say a lot of it carried over to today. Just they may come at different stages and may be delivered in different forms, but the fundamentals are the same. What is the market? What's the opportunity? Who are the competitors? How do you get it? How do you get it to market, et cetera? So a lot of what I learned there, I carry through to today, and I feel like I just rinse and repeat. Keep going. Keep doing it.
Amazing. So you graduated from school, then you started High Step Capital, which was a hedge fund, venture fund focused on technology businesses. Can you tell me a little bit of how how you did that, and you did that for a while. I mean, you
I
went off
did.
for 7 or so years or so.
Yeah, well, first when I graduated, I went to some big businesses. I worked at Fidelity for a while. I worked at Cambridge Associates, where I helped endowments and foundations allocate their capital to venture capital funds, and basically met all the VCs. I was 22 years old, and I was meeting, all the great legendary VCs of the time, and then giving them money, basically being the gatekeeper between them and capital from endowments and foundations. That was really cool, and I got to see all the I met all the VCs and networked with them. But I also my day-to-day job was to call the portfolio company CEOs and basically ask them how much value the VC added to their business. So it was kind of like the gossip network. I would call the VC and say, how did John Doerr do at Kleiner Perkins? How is he as a board member? What is his strengths and weaknesses, right? And I'd find out that he's really great at marketing and not so great at computer science or something. I'm not saying that about John Doerr, but just generally, that's kind of like the feedback I'd get. And then I'd also find out about all the other VCs that are on the board as well, and would hear like, this one VC, he's amazing, or he or she's amazing. They're so thoughtful and attentive. So it's kind of like doing due diligence on all the VCs while doing due
Right.
diligence on one. And I'd also hear things like that VC never shows up at the board meeting, or he falls asleep during the board meeting, and he's just completely worthless. And so you get the good and the bad, right? So once I had that network and I knew which VCs like really added great value, I could then like the most fun part of that job was finding the next generation of VCs that were starting new funds and knowing which
They're,
ones,
they're merging VCs, they're merging
yeah, the
funds.
emerging VCs, the ones that would spin out of Sequoia and start their next fund. I would know
Yeah.
which ones actually provided a lot of value and allocate to them. So anyway, after doing that for a while,
By the way, you're incredible, incredible first job, right? Like, or one. Uh,
amazing, amazing.
so accidentally this happened, or like
That was
had?
not accidental, not at all. No.
Okay.
My first job was Fidelity, and I was in the back office processing trades. It was basically a white collar, blue collar job. It was a processing line that get the trades in. I'd check to make sure wherever there was a trade error, I would have to fix it and then ship them out. I'd get a couple batches per day. I'd have to fix them as quickly as possible and ship them out and then wait for the next batch. I hated that job, but it got me into the door, right? And I knew I wanted to do something entrepreneurial and something around venture capital. So I did my informational interviews at night and would just ask anybody that was in the VC space, could you talk to me? I'm a kid out of school. I want to be a VC. I want to be an entrepreneur. Can we just talk, right? I did a bunch of those kind of informational interviews, asked friends of friends, and that's how I landed the Cambridge Associates job. And it was an amazing experience. I was young, and it was kind of weird allocating to these huge established firms, but it was also just a great experience for me. And
What
then
type of are we talking about, like 50 million, 100 million, 25 million? What type of allocations at this age, at this time you were doing?
I mean, for instance, when Benchmark Mark launched their first fund, which was the fund that invested in eBay, I represented 40% of the capital that went into that fund.
Amazing.
Yeah. I mean, it wasn't my capital. I was consulting for the endowments and foundations, but my clients, they put a lot of money into that fund. Another one was SoftBank Fund 3, which invested in Yahoo and Groupon. I'm sorry, Yahoo and not Groupon, E-Trade, Yahoo and E-Trade back in the day. So these are Web 1.0 companies. And I caught some really great venture funds when they were super young. And then from there, Goldman came calling, and they were starting an internet research group it was kind of the first one on Wall Street. And I kind of knew all the VCs and all their portfolio companies. So I was a good match. And while most people kind of have like 10, 20 interviews before getting into Goldman Sachs, and you have to be kind of top tier, just my network opened the door for me. And I was able to do it one interview, got the job, and had spent another few years as an investment banker slash research analyst at Goldman, bringing a bunch of Web 1.0 companies public. Um, and that was great. These foundational
That's like a
experiences.
complete full circle, right? You invested in when they were like pre-seed, and then now all of a sudden you're bringing them to public, and you're kind of going through the full life cycle of the journey for the startup.
Yeah, well, I invested in the funds, and the funds have
Yeah.
in them. So I didn't invest at that point. I was
I know, but I'm just saying.
yeah. Then I did a public offering thing, and then I went to the hedge fund side. Well, actually, when I was at Goldman, I was like, I'm going to be a VC. Like that's the idea. And then Web 1.0 crashed, and all the VCs got destroyed, and all the hedge funds who were my clients at Goldman continued to do really well. So they did well on the upside, and they did well on the downside. And I was like, nah, that's a good business model. Like they're always making money, no matter what the cycle is. They're making money. So I ended up becoming a hedge fund portfolio manager and analyst, and kind of spent another 8 years, 10 years kind of on the buy side, investing in technology companies. First for a couple big hedge funds, and then I launched my own fund called High Step Capital, which you mentioned. And I just allocated to basically the strategy was go long the internet and short anything that gets disrupted by the internet. Great strategy, and it just continues to work to this day. Like that, it's the disruption strategy, right? So we'd also use a lot of data, kind of data coming out of the internet to kind of pick stocks. We could go into a lot of detail about like some of the early use cases that we would early ways
No,
we
no, no. So let's talk about that. So obviously you at this point have been in finance for about a decade. Is about a decade or so, eight, 9 years or
it was
so?
12 years in total where I was on
12?
the buy side or in the investment world, I would say 12 years
12
total.
years. Okay. And one of the biggest things that you just kind of alluded to is what Clayton Christensen talks about is really disruption theory, right? Like what is the new technology that comes into place? What is it going to disrupt? How is it going to allow a much more nimble, faster company to be able to really take a bite out of the apple of this new technology that's come around and really take away market share from existing. It's kind of the philosophy, it sounds like, that you were approaching your investment thesis around. Am I summarizing that well, or?
Yeah, yep. And I am to this day, I'm a fundamental research analyst. I believe in finding the big trends, finding the white spaces, and allocating to that space, right? Either as an entrepreneur or as an investor, right? I'm finding where the puck's going to go, right? Wayne Gretzky, right? Finding where the puck's going to go. And then I want to find the teams that can actually execute and build towards that big white space, right? It's always big white spaces. You don't look for little ones. You look for big ones that are going to change the world, right? So that's always been my thesis.
How do you do that? Like most people, so like this is great because we're already jumping into some of the practical things, right? You've done it so well over the years, and so many, you know, being fortunate as long as we've lived and we've seen a couple of cycles a couple of times around now at this
Yeah,
point.
right.
How do you say, okay, this seems like to be a disruptive technology. What are the industries, how they're going to get impact? Can you elaborate a little bit into that?
Yeah, number one is like you talk to any VC, they'll say the same thing. Pattern recognition. You do this for a while. Any old VC, they'll say the same thing, right? They've done this for a while. They've seen this cycle before. They've seen this play out before. So I feel the same way. Like I keep seeing patterns repeat over and over again. So you kind of know how to play the game that's being played, the new technology, the new trends that are out there. So pattern recognition is huge, and I would say training in kind of fundamental research, how to like really understand not only the part of it is understanding the finances, the accounting and finances, which Wall Street really uh, trains you, like how are companies playing with their numbers? What is the real performance of the company? Why are they showing you an adjusted EBITDA number instead of a profit, net income number? What are they hiding, right? Why are they showing it that way, right? And like really backing to numbers. So that's one thing on the Wall Street side. But then on the kind of Silicon Valley early stage side, it's more like, okay, what is this technology and what is the opportunity with this technology? How is it going to change things? And if it is, where's it going to change things most? And I can go into my latest business, which is an AI business, and how we kind of got to where we got to with that one.
Yeah, I love that. So obviously you saw it with the internet. AI is the technology disruptor of today. So let's before we get into all of that, can you kind of When you think about, and I'm trying to kind of frame this for everyone that's kind of listening in, and how you've had the pattern recognition component of it. Have you seen this? You saw it in your era, and then what was another area that you saw this in as well too? If you can kind of give this so people can see the storyline of
Oh, okay.
why now you're going after this particular space.
Okay. So the internet gets started. It's a disruptive force. People say it's the greatest wealth creator of all time. It was also the greatest destroyer of wealth of all time, right? For every Amazon, there is 20 or 50 circuit cities, right? That was once a successful business that's no longer. There's newspaper industry that's got decimated. So, yeah, it did create incredible value for some of the top technology companies, but it also destroyed incredible value for so many companies and industries, right? And I've seen this pattern over and over again. And I would say that Web 1.0 was all about the communications protocols. It was like newspapers. It was also retail, like these different areas that really got where they really crossed with the internet. Like the internet really just decimated a few industries and I would say transformed those industries. There are some winners, there's some losers, but it really transformed those industries. Newspapers and retailers are two good ones, and there's a bunch of other ones as well. Um, I saw it. I've invested in so many online marketplaces over time. I love that business model. I mean, the internet's so great at matching buyers and sellers, workers and hirers, people who want to come together to kind of make a market, right? That's a great thing about the internet. There's so many online marketplaces out there. So that was a key theme for me in all of my investing. And eventually in 2010, I found a company called Lending Club, which was only a couple years old at the time, was matching borrowers and lenders. And I just went down that credit rabbit hole. I was an equity investor. I didn't know anything about credit, but I just found it so interesting that somebody who had credit card. First, I found it interesting that anyone who gets a credit card has gets an interest rate of 20 to 25%. Whether you are a recent college graduate or you're Bill Gates, if you apply for a credit card, your interest rate is 20 to 25%. So it doesn't matter
Wow.
how wealthy you are or how much financial risk you represent, you're going to get a high interest rate on your credit card, right? And I found that fascinating that it's not risk-based pricing. Everybody gets the same high interest rate. And what Lending Club was saying is like, okay, well, if you are a Bill Gates and you do carry credit card debt for whatever reason, I don't know why he would, but if you did carry credit card debt, wouldn't it be better if somebody could come along and provide you with a loan at a lower interest rate so you could refinance your 25% debt down to 12% or 11% or whatever the risk, if we could risk-based price those highest credit risk people, wouldn't it be great to lower that cost of capital for those people that do have, great credit? And I found that, yeah, that would be great. And that person's taking control of their financial life. I love that. And on the other side, as another as an investor, I could give them the money so that they could do so, and I could make a 10 to 12% return on that. I was like, man, this is a great return. If I can do this, it's the same type of returns I'm getting on my market neutral hedge fund, but the credit market is so huge, and it brought me down this rabbit hole, and I ended in the credit industry for quite a few years, and I built a few businesses around that. So I built a robo advisor that was in the peer-to-peer lending space and became one of the largest robo advisors.
And this was called Lending Robot, right? Is
Yeah,
it that one?
yeah.
Okay, nice.
It did have a couple of iterations of the names, but the final name, the name today is Lending Robot. Still in existence. We sold it in 2017, but it's still operating out there. But that was an interesting business, kind of allocating to consumers who were refinancing their debt, allocating to small businesses like dry cleaners and pizza shops that were, taking out small business loans, allocating to real estate investors who were doing fix and flips on residential homes. We found all sorts of assets that we could kind of lend against and get some really interesting yield. So that business was great, and we kind of built these consumer portfolios that were low risk, medium risk, or high risk. Um, you know, Yield would match the risk level, and we were able to kind of figure out how to digitally onboard the investors, um, allocate their capital all kind of electronically, um, show the kind of investor balances, all digital, and then withdraw them, just all digital. So we basically built a workflow that was completely online, and went
It's
from being
amazing.
a fund to a robo advisor, right? And kind of built that
So
out.
was this your, so this was now your first transition from being an investor to being
Yeah,
into fintech and now building your own
yeah,
startup as it was. That's
yeah.
phenomenal.
And
Uh,
it was gonna be a credit fund, but we turned it into, instead of a fund, we turned it into a completely digital experience, which made it a robo advisor as opposed to a fund.
And you're so humble. You're like at the same time you were also building sort of a fintech media company. Yes, no. Was this also occurring too, or
That was a side project that turned into a pretty big business. Basically, when I was allocating the fund, I wanted to meet these peer-to-peer lending CEOs to figure out which ones to put my money with.
right?
So I was like, I'll create a meetup. It was called LendIt. We said we'll make a meetup, and they'll hopefully a few
And
CEOs
you're
will
being
show
so
up.
humble. LendIt is like one of the fintech's premier sort of meetup slash conferences that happens. Is it twice a year, once a year, or how often is it still happening?
Yeah, well, it's been sold now. It's now called FinTech Meetup, but that business was in its heyday, it got to be really big and way bigger than I ever expected. I thought it was going to be a meetup, and it turned into like this huge um, fintech event, and would have it in the UK, would have it in the US, China. We had a huge presence in China. I had a 12-person staff in Shanghai. Um, yeah, it was crazy. It just kind of expanded my worldview kind of globally. And running, I got to see the power of the media as well. Like really how the media can expand your presence just globally so quickly.
So how are you doing both, right? Like here you are, you're building lending robot, let's call it, and at the same a startup and a robo lender or advisor, and then you
Yeah.
have this media company that's also starting to grow. So you obviously context switching a little bit here and there, back and forth on two different types of businesses. How are you figuring this out? What are
I mean,
some tips?
it's your personality, right? Some people just need to be really focused on one thing, and some people just going to do one. Some entrepreneurs will have one idea and will build one thing their entire life and perfect it, right? And I totally respect and admire those people. Other people like myself, I love creating new businesses. I love the 0 to 1 experience, and I'm happiest and most productive when I'm doing, one or multiple things, right? There's always another one in the pipeline, which makes me a little bit like a VC, but more like I've kind of figured out what my role in the world, which is basically a serial entrepreneur. That's really what I am. I love building them, and I've built up some great relationships on the VC side, so I can get them funded sometimes too.
That's amazing. So now let's talk about AI, right? So you went through when was the first time was it that you saw the potential of AI and you said, man, there's a lot here. Was it 3, 4 years ago when OpenAI
Okay.
released their
Uh,
APIs, or when were you a part of this? Okay, there's something happening here in the AI world.
all right. So I'd say in 2017, I sold my robo advisor, and I saw two paths. I could either go down one path, which was blockchain, or the other path that was AI. I realized these are two kind of fundamental technologies that are the next wave, right? They're going to change things. On the AI side, this was this decision was made in 2017, but going back to like 2014, 2013, in credit and lending, those businesses aggressively adopted machine learning very early in the AI cycle. So I spent a lot of time, even in my own in lending robot, we'd spend a lot of time thinking about how we could, when you allocate to a loan, like to a borrower, you get all sorts of variables on that borrower. Like you're not only saying like what is their FICO score, but you're also seeing things like how many credit cards do they have? Are they married or are they single? Do they live in a home or are they a renter? Like there's like literally like 150 different variables for every single loan, right? And the lenders originate like 4,000 loans a day. So we were building this technology where, and by the way, when all those loans drop, the first buyer, whoever gets in first, got to buy the loan. So we would build this technology that was kind of like a high frequency buying that would ingest thousands of loans, review every variable, and then figure out which variables were most meaningful, which ones would give you the biggest signal that this borrower wouldn't default. And what machine learning would do, so then you start doing regression. You'd say like, well, a person with a FICO score above 700 that's a homeowner that has at least three credit cards, that person has a lower likelihood of defaulting than others, right? So you mess with the data basically, you do all this data analysis
So
to
this
figure out
this wasn't necessarily an underwriting model. This was more of a loan acquisition model. Am I hearing you correct?
it it the loans had already been underwritten, but now they were being made available to invest in. So it's like
Uh-huh.
re-underwriting, which
Yeah.
is like loan acquisitions, like loan purchasing, right? So we were like looking at all these variables and we realized that traditional logistic regression would take one variable and regress it against two or three other variables, which is that's what like American Express and Capital One, this is what they were doing. And then the whole industry moved into machine learning. And instead of regressing one variable against three variables, with machine learning, you could regress all variables against all other variables. So you'd have this huge, massive network of kind of correlations happening under kind of in the black box. And
Right.
at the end of it, it would come out with, okay, these are the loans that are most likely to not default. That was the early stages of machine learning, one of the first applications of machine learning. So we had adopted, our industry had adopted AI 2013, 2014. It was really early on. I mean, it's obviously gotten much more sophisticated. But that, so I spent a lot of time in the machine learning space as a result there. On
So is this what Folio was, or which company was this, or
This was
part?
still lending robot. This was still
Oh,
we
this was
were
still Lending Robot.
yeah,
Okay, got
yeah.
it.
So then we get to 2017, and I had to make the decision: do I go down the AI path or do I go down the blockchain path? And what I realized is that the blockchain was the next protocol. We're done the communications protocols. We're now doing the money protocols, right? It was just another. It was an extension of the internet, right? It was figuring out how people can collaborate in a protocol. A protocol is a system of collaboration, right? It's a bunch of people that are getting together and following some rules that allows them to collaborate in order to do something together. So to me, it was like another evolution. It's just the internet. It's another layer of the internet that's being built. So I had to make the choice. I chose blockchain at first, and I built two DeFi protocols in the blockchain space. But I still always loved AI, so I kind of gone down both paths. We can talk about the blockchain side, or we can talk about the AI side. Really, whatever you'd like to talk about.
Yeah, no, so you were going down the blockchain side, you're going down the AI path.
Yeah.
So let's go down a little bit about the blockchain path a little bit and see
Okay.
at what point did you decide, okay, it seems that there's more opportunity here in the AI path now, and let me kind of shift focus. Has that occurred yet, or do you still think they're kind of, if you look at both of these new technologies that are occurring, do you think they're accelerating at the same pace, or has AI taken first step forward now and blockchain is about to start going? Where do you see this today?
Yeah, I would say that if you're a surfer, the blockchain wave is a big wave, but the AI wave is like the waves, what is it, Maui, or like the ones in I forget what it's called, Half Moon Bay, right? They have
Right.
the giant waves. That's like it's like a huge wave. So anyway, they're both really great waves, and they're both got really great opportunity. And in the blockchain space, yeah, going down the blockchain path, again, what I would say is that it's a system, a protocol. This is what gets me. It's a protocol is a system of collaboration, right? What that means is we follow protocol every day when we're driving our cars and we get to a stoplight, and there's red, yellow, green. And everybody follows the protocol that when it's red, you stop, and when it's green, you go, and when it's yellow, you proceed with caution. That's a protocol. We all follow it. It's a system of collaboration and allows us to operate efficiently, right? That's
Right.
all that blockchain is. It's a protocol, right? So I think about like what protocols can be built in order to get multiple parties to collaborate and do something really efficiently.
So
And
what you're really good at is spotting when new technology comes and it disrupts something. What would this protocol disrupt for some people who might not know about it?
yes, yes, that's what I think about. Like, what's this? This is a machine. This is a new tool. What will
Right.
this tool be good for? Like, what industries will it be good for? How can we use it? So, for the blockchain, having just sold a credit company, I was looking at it and saying, securitizations are a really big business and they need multiple parties. You need to have a trustee, you need to have an issuer, you need to have a collateral manager, you need to have investors, you need to have custodians. You have all these different parties that come together so that you can pool a bunch of loans and issue a bond that's backed by these loans. Each one of those parties have different roles in a securitization. And if you could create a protocol that allows those parties to collaborate once one service provider completes their task, then it has to move to the next service provider who has to complete their task, and then the next one. If you could create a protocol to make that a really efficient marketplace, then you could drive down the costs of completing a securitization and issue more faster, better, cheaper, basically. And that kind of concept is not just for securitizations, but for like any financial transaction and all the different service providers that are in the financial services industry. Protocols can be used all over the place once you start thinking about it. So the one that I attached to was the securitization one, and I built a couple of securitization protocols as a result. And I think that's keep hearing about kind of tokenization is going to get huge. It's going to get to billions or trillions of dollars, and all these big financial institutions are going to come online, and real world assets is kind of going to be all tokenized, right? I built that. I built that in 2017, 2018. My first protocol was called Centrifuge, which was one of the first real world asset protocols, and that's still a trend that I think is there's tons of upside opportunity there to this day.
Amazing.
Yeah.
And so now let's talk a little bit about AI. So
Okay.
same question back to
Okay.
that. AI, I mean, clearly you a lot of people are still like arguing is it working? Is it disrupting? Where is it at? I could
Yeah.
tell you as an agency owner, we've been using it for now 3-4 years or so, very adamantly in a ton of our different workflows, from content creation to everything from analytics to emails to even image creation to voice to like I don't think there's a workflow that we have that doesn't have AI inside of it or has
Yeah.
an AI SOP around it. And more even excited about like this whole world of agentic AI and all of those different things going on. So
Cool.
I'm clearly biased towards this
Yeah. Yeah.
technology. But tell me about your perception of it and where are the major areas with your incredible pattern recognition that we've talked about and all
Yeah.
the years of things you've seen. Just kind of go. Here are all the places I know can, and here's a utility for this, and all the different places I could see it getting disrupted.
Okay. So it was March 2023. I had to shut down a venture that I'd started called N Labs. If anyone knows about Operation Choke Point 2.0, it's been a lot of press recently. Basically, my business was forced to shut down after the banks went under and stopped serving crypto companies. Oh well, oh well, so sad. You get some losses sometimes. So sitting there in March 2023 with my CFO, who'd been my CFO for three different businesses in the past, and before being my CFO, he was an auditor at Ernst Young UI, um, and ChatGPT had launched in November 2022, so it was only a few months old, but that was the first time the public had seen the power of generative AI. Generative AI is a lot different than machine learning, right? Machine learning is really about give like a ton of historical data, like the credits that I mentioned, repeatable structured data, and let it figure out predict what's the future based on the past data that you're giving this past data structured data stream. That is machine learning to at least in my view, that's kind of what the best use application of machine learning is. Generative AI is more about generating text, generating, reasoning, just figuring things out, basically being your co-pilot or your assistant that you can kind of talk to and kind of generate new information with. So when we run generative AI, if we're looking at a financial statement or something, we may pull out all the text and read it through an LLM, and then we may use other technologies to extract the tables and the data and run it through Python or something to do some calculations. So it's kind of like a mix that, with generative AI. But we realized quite like most people, when you first played with ChatGPT for the first time, kind of blown away by what it does and its potential in the world. So we were sitting there and um, basically by June 2023, we were thinking about our next venture. And we were saying, all right, this generative AI thing, it's going to really impact knowledge workers. This, just like Web 1.0 impacted retailers and newspapers, this wave is going to impact knowledge workers, right? So which of the knowledge worker industries does it make most sense for? And we spent some quite a bit of time thinking about that. And we landed on accounting, and then we landed on audit within accounting. Basically, accounting is the language of business, right? It's the fundamental business block of business, right? And within that, audit is the is the task of reviewing the language of business and attesting to whether it's valid or not, right? And we felt like that is really where you're getting to a building block of how all businesses are built, and something that everybody needs. Now, you go to peeling that onion back a little bit more. What does an auditor do? They get a data set, last year's financials, that is static, and they need to go run about 1,000 procedures, accounting procedures, on that data set. Each one of those procedures is defined by rules and regulations, and they have to go through and do each one of those with tremendous precision without making any mistakes. And once they do that, based on the results, they can make a decision of whether that company's financials are valid, qualified, or unqualified, right? Whether they are valid or not valid, right? So that's what they do, right? All of
Wow.
that is extremely procedural, and and just really attuned to something that AI can do. Then we realized that the number of CPAs in the industry is dropping dramatically. All the accountants are approaching retirement age, and there's very few people graduating from colleges with a CPA focused on the CPA industry anymore. The number of CPAs are down 17% over the past 3 years, and as a result, there's just not enough workers to do all the work. It also means that the people that do the work get promoted faster, and this is an apprenticeship industry, so they get promoted faster, and they're prone to make more mistakes than their predecessors, just because they haven't had the same amount of training. Um, while we were doing our research, the PCAOB, which is the government entity that regulates public company audits and auditors, came out with a statistic saying that 40% of all public company audits, or 40% of the ones that they reviewed, have a type 1.A deficiency, which is the most serious type of deficiency. 40. And the
Wow.
yeah, the average S&P 500 audit costs something like $12 million, and they do 10,000 hours spent on that company to do an audit, like if you audit like an Apple or an IBM or something. Amazing amount of time and energy and dollars is spent to do an audit, and 40% of the time there's deficiencies. Like,
Wow.
that blew us away, completely blew us away. Why are there so many mistakes? And it comes down to two things. One is what I just mentioned, that the people doing the audits, they're getting promoted too quickly. They're just prone to making more mistakes because there's less kind of experienced auditors. On the other side, you have extremely complex regulations that get more and more complex every year, and it's just really hard to
Keep
kind of
up.
abide by all those regulations.
Right.
Perfect use case for AI, right? Read all the regulations, read each one of the procedures, and make sure that procedure follows the regulations to a T. And if it doesn't, raise the issue, tell the auditor there's a potential deficiency here, right? It's basically,
Amazing. So
yeah,
where's Tellen at? So you started Tellen in it looks like 2023.
yep.
Are we how many clients do we have? How many people are who are you selling to? Is it to the big uh audit firms, or like walk me through where it is in its journey right now?
Yeah. So it's been a good journey. We came up with the idea in June 2023. October, we incorporated. We said, yeah, we're going to go for this. We closed a pre-seed round, $500,000 pre-seed round, and we started building the base product. And we also went out and started selling before we had anything, right? I think that's one key lesson that give to any aspiring entrepreneur is like you sell from day one, whether you have a product or not. You start selling. You sell vision, right? You sell
Right.
vision. You just want to get people that will use your product, that will talk to you, that will commit early, right? So from day one, we were selling. Um, we ended up building the product, releasing the base version of the product in the spring of 2024. Um, Basically right after busy season, April 15th. Accountants are extremely busy right up until the end of April, at which point they free up a little bit. So we had our base version out and ready to go by the time the busy season was over. We then we kept kind of iterating on the product. We brought on our design partners, early design partners. We kind of iterated a little bit on we knew what the platform would be, but we didn't know what the specific applications would be. We knew one would be in audit quality because of the deficiency thing that I mentioned, but we had to also kind of figure out what other products. So um, we iterated a little bit over the summer. We landed on, two really great products, and we rolled them out in September of 2024. Um, MVP, and then we basically started marketing that in November. So really, we've started marketing since November, and now here we are in February 2025. We have 10 clients. We just signed our first top 20 client called Cohn Resnick, which is a big accounting firm. We have uh, we have a number of kind of mid-size firms that are kind of top 100 type firms. Um, Everybody's so enthusiastic about how we can apply AI to their business. And yeah, I'll stop there and see if you have any questions.
Oh my God, that's phenomenal. So some amazing lessons for the listening audience here, right? So like you spent a good 2 or 3 months really validating the business itself and saying that, hey, and looking at the different data, the metrics, speaking to people, figuring out what the real core problem was.
Product research,
A
yes.
lot of research.
Called 100 auditors in like 3 months. All we did was just
Amazing.
call as many as we could.
Amazing. And this, I'm sure your media background at this point and your early days of what you were doing as all came into play here where you're not shy at all to pick up the phone and make the phone call. So
Cold
so
calls. I do
go
cold calls. I'll call anybody, So yes, it requires you just to dig, just to be hungry and dig and just find people that'll talk to you.
I love that. And
Yeah.
then once you had the reassurance that you were on, there's something there, right? You're like, there's something definitely here. There's a really good use case. You started pitching. You start, the product wasn't even built yet. You had a good idea of how you guys can build it, but you actually flipped the script here, and you started really pitching and starting to really see how much genuine interest you would get from potential clients and customers. And now fast forward with the product being only out and really in market less than a year, it sounds like it. You have 10 clients, already one of the bigger accounting firms on board, and it seems to be living up to what you wanted to build, right? So what are some of the current firms' feedback that you're getting from them and how the product is performing? What is the performance enhancements that they're seeing from their accountants that are using it? Is that still too early to kind of know that, or what is the overall genuine feedback you're getting from the clients that you have?
Okay, so we're a little early for that because we built the platform, and now we're going to build the applications, and we're building the applications with our clients right now. So there's nothing that's like totally in market and usable yet. They're pretty
Okay.
complex applications, but the underlying platform is there. And so I can tell you a little bit about that, and that gets into kind of agentic workflows and AI agents and that type of stuff.
Yeah, why don't we talk about, yeah, applications that you're kind of understanding now where you
Yeah.
see all of this could potentially go. So like as you're integrating more and more with the firms.
Okay. First of all, we are a vertical AI. specialist, right? We have one industry and we're going very deep in that one industry. Our industry has extremely high data insecurity, confidentiality issues, of course, right? An accountant may have 1,000 clients, and every one of those clients is giving them their private financial information so they can kind of complete their accounting with that client. That's the information we do our analysis on, right? So it's not like an accounting firm will say, hey, startup, here's 1,000 financial statements from all of our clients. Go take a look at them and give us your analysis. And then they don't ship their data to us. That's not happening, right? So the first thing we had to realize is how can we structure a business? Because we can't be a SaaS business. They can't send their data to us and have us, analyze it. So the first thing we had to realize is that we needed to set up virtual private clouds for each one of our clients that's owned by them. They can drop their data into their own cloud. We would harness AI models and put them into their cloud, and then we would build our applications in their environment, right? So none of the data leaves their environment. That was lesson number one. That's a key to basically any enterprise that has sensitive data is the structure of the business has to change a little bit versus what traditional SaaS businesses have done, right?
Right.
Especially when you're young and you have no reputation, right? Once you got the back end done, then we needed to figure out platform and applications on top of the platform. We would say we harness AI models, whether it's OpenAI or Anthropic or Llama or whatever. We take in the models and then we build applications that are specific for the accounting industry. And we're really good at that. We've got a whole staff of CPAs and we kind of build these applications that are specific for our industry. And that was interesting because we kind of built out this middle layer platform that would ingest the data or ingest the models, and then we would build these workflows and these applications that were specific around what an auditor would do on a day-to-day basis. Might be a simple thing. The one I'm going to give you is like you're writing a financial statement and you need to create a footnote about a lease contract, right? An auditor would read the lease contract from their client that would give terms like this is the start of the lease and the end of the lease, and this is the monthly payments they make, and it has all these kind of terms of the lease, right? They'd have to take that and they would have to build an amortization table in Excel. They take it in a PDF. They have to build an amortization table in Excel that kind of present values back the total value of the lease, and then need to take that model in Excel and then have to write a footnote in Word that describes exactly what this company has done and describes the model that they built and ultimately ends up at a number, right? A lease number that ends up in their financial statements, right?
Right.
The process goes data extraction from a PDF, transformation in Excel, generation of a report, a footnote in Word, right? 3 separate steps, right? That's a workflow. Step one, step
Right.
two, step three. Each of those steps has an agent that can complete that step. The first one is the PDF extractor agent. Their role is to extract data from a PDF and put it into a table, right?
Right.
Second one is a Excel modeler agent. Their role is to take inputs of data from a table, complete some type of formula-based transformation of that data, and output a new table that's kind of does whatever it's supposed to do. The third one is the report generator agent that generates a new report based on the reading the lease contract and extracting the data from the Excel table and put together a pretty report at the end that describes what the process that happened. Right? There's
I love it. I love how you broke down agents into simple workflows and simple steps. So what you guys are doing really is you're taking the whole process that a typical accountant would go to, and you're really trying to figure out what is the bite-size elements of each one of these steps that we could implement AI in and implement it within our platform. Is this standardized across the firms, or is it customized based off of the firm's workflows? Like,
all procedural. They all have to do the same procedures. right? So
Amazing.
yeah, I mean, they
Eh,
all have like different templates, and they may have slightly different methodologies, but generally they're all kind of calculating the same things. They have
So,
to.
so the only variance here really here is that you're now, as you mentioned before, it's on their data, on their in their cloud system. So the implementation is what's allowing you guys. So what happens when you release a new feature? It goes across all of the platforms, and you're like, okay, here's a new workflow that you we're supporting now. It will just automatically show up in every single one of your clients' workflows.
Yeah.
It's that process doesn't change at all on your end, right?
No, I mean we're still perfecting some of that, but that's the thing that launched in March was the platform, that back end platform that we can install into each one of our clients' environments. The thing that we're working on now are the applications, like the one I mentioned, that lease amortization application. That's a very small one that's part of a bigger project that we're doing, but that's the type of stuff we're working on with the clients now. What I would say though is like when we built this, we didn't know what to call it. We just said we're harnessing these models and we're building these applications, and but now the picture is forming, and really what is Tellen? Like how do we position ourselves? Who are we? And what we've realized is that we're an agentic framework, right? We're just a very specific agentic framework. The name Tellen means comes from Middle English. It means to count or to count
Right.
money. And the name a teller, a bank teller, comes from the word Tellen, right? And the bank teller was the guy that counted your money. Go to the bank, they count your money, right?
Right.
They performed a financial transaction, right? That's what our agents do. They count your money, right? They're kind of different in different ways. They're counting your money. That's effectively what they're doing. So what we realize is like we are building this specialized agentic framework specifically for financial services, specifically around accounting, around financial transactions. So all of our agents are financial agents that do some type of financial transaction kind of method or procedure, right? Um, those are, and once you have those agents that do these very specialized things like PDF extraction or model building or whatever, and you can build agentic workflows that string those agents together into a multi-step process that uses multiple agents and multiple AI models in order to complete their workflow. And you do it in one category, which is financial services, accounting, counting, financial data. That's where we live in the world. So if you think about us, if we're kind of like, the other agentic workflow platforms that are out there, like a Crew AI or an AutoGen or a LangGraph, those are just horizontal plays that kind of go after any industry and do any type of kind of framework, where we are specifically oriented towards financial companies, financial
I
transactions.
love that. I love that. That's incredible. So,
And we
so
kind of stumbled
you,
into it. Like we knew what we were doing, but we didn't really think the pieces are just kind of falling into place as we kind of go along.
that's awesome.
Yeah.
So are you guys the only ones currently working with uh, accounting firms, or are you noticing other competitors already starting to emerge, or does this feel like a completely blue ocean for you?
When we go to the accounting firms and we describe how we're creating a platform, it's their platform, we're infrastructure, so they can build their own AI platform, and then we kind of build all these agents for them to do all these things. Almost all the time, we're the first ones that have seen that does anything like this, and they know that the wave is coming. There is this fear, like, but also this greed that's driving them. Like on one side, it's like we have to do something because this is going to transform our business, and we have to be a leader as opposed to a laggard. Yeah, so that's kind of where they're going with their minds. So everybody wants to dip their toes in, or many, I shouldn't say everybody, but many of the firms we talk to want to get in. They want to figure it out, and we give them an easy way to get in and figure it out with us, giving them their own platform that they own that will kind of evaluate, that will kind of evolve over time.
I love that. So we're getting close to the top of the hour here. What one advice would you give anyone currently working in the agentic AI space, especially trying to do enterprise sales? Like, what is one piece of advice you've learned over the years for all the other founders listening in this category who might
Can I give
be
you
in a
two?
different industry? Like, What do you think are some of the things you've learned that is helping you guys, gain the early traction and early success you're saying?
I'll give you two.
Okay,
Um,
perfect.
the first one is when you're thinking about your business, be as close to the regulation as possible, right? Everything starts with the regulation and goes from there. So figure out whatever industry you're in, there's some type of rules and regulations that are around that. Start there when you're building out your solutions, because whatever your client does has to abide by these rules and regulations. So it goes back to that whole thing about you do a procedure and you compare it to what the rules and regulations are, and if there's an issue, you raise it. Like that's a model that works in every vertical, right? And it's a great place to start because if that's the source of truth, the rules and regulations are the source of truth, that's how you have to behave. So if you start there and build a bunch of agents around that, then you're going to be a trusted partner with that firm, and going to get to do all sorts of other things with that firm, right? So I would say that's the first one. The second one in enterprise is figure out how to use their own proprietary data. All of the generative AI models are built on the massive waves of information coming out of the internet. What it's not built on is the proprietary data sets held within the enterprises that, it's not available to anybody. So when you go to that enterprise and you say, I'm going to take your data and we're going to make it extremely valuable for you. And now when you use your AI models with your data, you're going to have a huge advantage over anyone else that doesn't have the type of data that you have in doing what you do. So that's again, that's useful in any enterprise focused AI company.
I love that. So look at the laws, look at the rules, look at the regulation, and know that in and out. Ideally, even in a category in a space, if it's changing a lot and has major impact, that's even better, right?
Yeah,
And then
it's your
secondarily, really make it very personalized to the organization's data set. So it's much more applicable and effective for all the members within the organization.
yeah.
I love that. Jason, it's been an incredible conversation, man. I really enjoyed listening to your journey from
Appreciate it.
from graduating from school, getting your first job, and really dialing and listening into who the best VCs were, and really being able to spot and find the emerging founders, and then from there, going and working in private equity and really developing your pattern recognition skills over the years, from all the way from internet to blockchain to even now AI. It's been a wonderful story, and thanks for sharing that today.
Yeah.
It really showcases how you really look at every business strategically with data, and also think about how you can potentially scale them. Thanks for sharing your incredible things you're doing here at Tellen as well, and some of the great lessons you've learned along the way, and how you're really trying to transform the accounting industry, and making agentic AI platform that can really enable the different firms to really take advantage of the challenges they're facing today, which is from the worker shortage, and how the opportunities for them to be able to provide more value for their clients. So if people wanted to, everyone listening in today, if they wanted to connect with you, what's the best way for them to be able to reach out? What should we put in the show notes?
Probably my LinkedIn.
Your
Probably that's
LinkedIn?
yeah. Yeah.
Perfect.
Yeah.
Thanks again, Jason. It's really been great having you here. Looking forward to seeing what happens with Tellen, and where this goes, and really excited for all the accountants out there and the future of accounting and what you've been able to build. Thanks for coming in today.
Hey, and Hamlet, I just got to say, like, I really appreciate you kind of providing a forum for people like me. And I love your guests all talking about growth in different ways and how they've kind of figured out their business model. So I really enjoy the content that you produce, and I really appreciate you having me on the show. So thank you so much.
Thanks, Jason. Thanks for coming on. Have a great day.